Up next, an important word on home office deductions. Is it a good idea to have a home office? What are the benefits? How much can you file towards tax deductions if you so choose to have a home office? All that and more coming up in our popular segment called Tax Solutions. This educational and informative segment is presented to us by Mr. Adil Baloch, who is the Chief CPA at Accurate Records and Tax Service, located in Montgomery Village in the heart of Maryland. To moderate this segment, we have our Chief Attorney on duty, Mr. Daniel Wright, also from the state of Maryland.
Good morning. My name is Dan Wright. I'm an attorney in Rockville, Maryland. Welcome to Capitol Forum. Today, my guest is Adil Baloch. Mr. Baloch is a certified public accountant and a certified tax resolution specialist whose office is in Gaithersburg in Montgomery County. Welcome, Adil.
Thank you.
Thanks for coming.
Thanks. Thank you, Dan.
Our topic today is use of the home office deduction for your income taxes. Now, nobody wants to pay any more in income taxes than they can help. And a lot of us have heard about the home office deduction, but we don't really understand it very well. So, Adil, could you give us a little overview of what the home office deduction is and who qualifies maybe to use it?
Okay. Keeping in mind that we have about, 13, 14 minutes, I'll try and see how much information we can cover. But yes, you do qualify in certain cases. You do qualify to take a home office deduction.
Okay.
It doesn't necessarily have to be a home that you own. It could be a rental apartment or a house that you rent that you use a portion of and proportionately take that deduction as a home office deduction, depending on if you are in business for yourself or if you are using that place for business, even though you work for somebody else, you are working from home. There are certain conditions. As long as you qualify within those conditions, obviously.
So even though it's a home office deduction, it could be an apartment that's the home.
It could be an apartment rental, as long as you're spending money paying for that property or that space that you're using for business. Yes, you do qualify, whether it's a rent or a mortgage.
And you don't have to be the owner of the business. You can be an employee.
You can be an employee. Now, that's a good question, good point, an interesting point, actually.
Okay.
The operating term here is for an employee to be able to take a home office deduction for the work that they do for their employer. The key here is that work that's being done from the house has to be it has to be a matter of convenience for the employer, not the employee.
I see.
If the employee is working from home because it's convenient for them, that probably will disqualify them from using the home office deduction. But they're doing it because it's inconvenience for the employer. They will be able to take that home office deduction.
What about people, for example, who work at for the government and are telecommuting? Are they allowed to?
That's a good point too. Again, it's the convenience that comes in.
Right.
So depending on what kind of arrangements you have with your employer, different agencies look at it differently and they have different requirements. So it all depends on what the agency decides. I think, and as far as I know, in most cases you do not.
Okay.
But again, depending on the convenience of the employer, again, if it's for the convenience of the employer, be it the government, be it a private sector job, whoever you work for, the definition does not change, the requirements do not change. Everything still applies.
Is there a limitation on the percentage of your home that you can claim as a deduction? I know many professionals, you see dentists work out of their home a lot.
Yes, sure.
Accountants, even lawyers nowadays do.
Sure.
Is there a limit?
So yes, there is a limit. Of course, there's a limit. So what happens is that let's say you use a certain portion of the house exclusively. Again, these are the terms that have to be taken into account. You must qualify under these terms to be able to take the home office deduction. So the exclusive use of that space for business purposes. An example of exclusive use would be somebody who is maintaining the inventory for their business in their basement. There's nothing else that happens in that basement. It's just the inventory that they keep there. That's a perfect example of somebody who would be able to take a deduction for the home office use, either for their business, or it could be an inventory that belongs to the employer that they're keeping with them. They might be in a management position, and it's easier for the employer to keep the inventory with them for whatever reason. They might qualify even in those cases, as long as the employer is not paying them the rent for the space that they're using. So it has to be exclusive. And in some cases, they also require you the IRS also requires you to be able to call it as the principal place of your business. Many people, I knew somebody who actually had the main level of their house, the basement and the upper level for their personal use, but the main level of the house was their office from one corner to the other.
Right.
They had their staff sitting there, they had their clients come in and walk in and visit them and so on and so forth. So that makes it very exclusive, and that makes it the principal place of business as well. So that's another good example of something that would qualify to be a home office, and you can take a deduction for that.
Is this something that the IRS scrutinizes very closely?
Yes and no, depending on what is it that you're doing, whether your profession justifies for you to have a home office, and then also looking at the percentage of the overall space that you're taking as a home office deduction.
I see.
If you're a salesperson and you're on the road 10 months out of a year, and then you're claiming 50% of your house as a home office deduction, for lack of a better example, that's a good example. That's definitely going to get some scrutiny, and people would probably, IRS would like to know more about that home office deduction, as to what's the justification and why is it being taken the way it's being taken.
Now, how is the home office deduction actually calculated?
So there's two different ways.
Okay.
Prior to 2013, there was a method called, which is we call a regular method, which is quite complex compared to the new method, which is the simplified method. Simplified method, all you do is you just calculate the square footage, or you just measure the square footage where your home office is, and you just multiply that by a flat dollar amount, and that's your home office deduction for the year. Now, on the same token, the regular method, which I pretty much use for all my clients, because yes, it is complex, it's a little more tedious, it involves more work, but it almost always gives you a higher deduction as opposed to the simplified method, because you're restricted to that just one multiplier and then you're done.
Right.
In the regular method, obviously, you take the square footage of your office space, home office space, and then you calculate a percentage relative to the entire size of the house, or what percentage that space is, and then you can multiply that percentage over to your mortgage interest, to your personal property taxes, to the maintenance, to the utilities, to quite a few expenses that you incur. Obviously, you cannot deduct your grocery bill and those kind of things, and your cable entertainment, those kind of things you obviously can. But most of the things that are necessary for the maintenance of the property or your house would be, as I said, interest and property taxes and insurance and maintenance and those kind of things. You take a percentage of all those and you apply those as a home office deduction to your business before you take the deduction for your itemized deductions amounts on your Schedule A for your individual taxes. So it's a pretty significant benefit, especially if it's a sole proprietorship. We were talking about sole proprietorship earlier, where people actually have to pay Social Security and Medicare. So if you can actually subtract that, you get the Social Security and Medicare benefit from that deduction, as opposed to taking the whole amount as an itemized deduction, which does not really give you that benefit. So it could be, if people plan it well and actually follow the guidelines and the instructions and do it exactly the way it is supposed to be done, it could be very beneficial, especially to the small business owners.
Is depreciation part of it?
Yes, the depreciation based on the percentage of the house and the value of the house. So you obviously calculate, if it's 10% of the whole of the entire house, you're taking 10% of what would have been a depreciation of that property if it was a rental property.
Now, do you have to pay that when you sell the property?
It is recaptured, sure. But obviously, if you take enough depreciation to disqualify you from the capital gains exclusion of 250,000 or 500,000, depending on your filing status, yeah, it could be. It could come back and gets added back to your basis. Correct.
What are the salient features that differentiate the simplified method from the regular method?
Good. That's a good a good question, in that it hopefully it'll help me explain the two methods better. As I said, the simplified method, obviously, it's very cut and dry, formula driven. All you do is you probably just a measuring tape, and that's all. You just do the measurement, you get the square footage, and then just multiply it by the flat dollar amount, and that's your deduction. Obviously, the regular method, based on all the variables that go into it, you obviously have a whole lot more benefit, and that could be one of the salient feature of the regular method, where you can actually do more work, but then you get an equally higher benefit for the amount of work that you do to come up with that amount.
I see. Why did they start this new method in 2013 if it doesn't give you the same amount?
So in some cases, first of all, it's, for most small business owners, if they decide to do it themselves, it's really not that simple, and it's not that easy for every small business owner. So you could be exposed to mistakes, you could be exposed to overstatements, understatements, everything. This at least contains from that issue to expand any more than it has to. It doesn't. It actually contains. It keeps it simple so that people can actually use it and be accurate at the same time, and it encourages people to actually use it. Now you do not have to worry about whether it's going to get scrutinized to the extent that the regular method might be.
I see.
And then again, as I said, if the calculations are off, and if it gets scrutinized, chances are that it's going to hurt you. So it's basically, it not only simplifies the calculations, but it simplifies the overall process for you to file your taxes and not worry about getting too much scrutiny on those taxes.
I see. What about someone like me? I have an office. I also have an office in my home that I use exclusively for my business. But can you take a home office deduction if you also have an office?
Absolutely, yes, you can. So the operating term here is that it has to be, if it's not principal's place of business, it has to be used for business exclusively. It has to be exclusively used for business. An example would be that you have your home office, but then you also have your video game in that home office. You work 9 to 5, but then you play video games 7 to 9. That probably will disqualify you from using that home office as a home office deduction. You may have to prorate it in some cases because you're not using it 100% of the time, and potentially it could even disqualify you completely, because now you have to justify whether it was used more for business or more for entertainment, and so on and so forth. So that's as I said, the operating word here is the exclusive use, and as long as it's exclusively being used for business, it's fair deal whether you have an office outside of your home or not. That would qualify as a home office.
You can do both. Okay.
Correct. That's right.
That's very helpful. Well, thank you, Adil. I think you've given us a lot of information to think about, and a lot of people ask me questions about this, so I'm sure that the viewers will be benefited by your knowledge. Thank you very much for coming.
You're welcome. Thank you.